Imagine an economy so tied to real estate that 70% of citizens' wealth is locked in housing. Yet, that market is collapsing. Meanwhile, young graduates, desperate for jobs, are buying lottery tickets, hoping luck might solve what the economy can't. This is China's economic reality today, where rising unemployment, deflation, and speculative market rallies paint a complex and fragile picture. China's economy has hit a wall, despite recent stock market surges suggesting otherwise. While the stock market has recently rallied by 20%, it's a rally built more on hope than hard economic reforms. This burst of optimism in stocks isn't driven by deep-rooted policy changes, but rather by the prospect of temporary fixes. At the core, China's economy is still struggling with a multi-trillion-dollar housing crisis and economic slowdown. The nation's real estate market has ballooned in recent years, with property prices skyrocketing. For millions, real estate has been the bedrock of personal wealth. So when housing prices began to fall, the effects reverberated across the entire economy. Developers are facing bankruptcies, projects are stalling, and citizens' wealth, deeply tied to property, is in jeopardy. One of the most concerning aspects of this crisis is the alarming youth unemployment rate, which now stands at a staggering 18.8%. Young people, especially fresh college graduates, are finding it nearly impossible to secure jobs in this climate. This desperation is visible in the rising lottery ticket sales, as many gamble on a chance to escape the economic gridlock. The high unemployment among youth is more than a statistic. It's a signal of an economy struggling to provide basic economic opportunities for its future workforce. Then, there's the threat of deflation. Consumer demand is sinking, with people holding back on spending in fear of what the future holds. Deflation may sound benign, but in economic terms, it's a red flag. When prices drop, consumers wait, hoping for them to drop further. This cycle of withholding spending feeds into itself, leading to a stagnation that can trap an economy in a downward spiral. To counteract these problems, the Chinese government has deployed a vast stimulus package, injecting billions to revive economic growth. But this approach raises questions. Is it sustainable? While the stimulus may offer short-term relief, it could also be sowing the seeds of deeper issues. There's a risk that these measures might only delay the inevitable, piling on debt that could destabilize the economy even more down the line. The recent 20% surge in the stock market has many watching with bated breath. Investors are hopeful, but this optimism is largely speculative, relying on future promises rather than concrete economic stability. With the economy so reliant on government intervention, there's growing concern about the long-term sustainability of these measures and whether the economy can withstand future shocks. China's current economic journey is a delicate balance of hope, speculation, and looming risks. The massive stimulus package and rising stock market may seem like signs of recovery, but beneath the surface lie fundamental issues that are far from resolved. As the economy navigates through this precarious period, the question remains: can these measures lead to genuine recovery, or are they merely a temporary reprieve before a deeper decline?